Why do we need to have separate cyber cover? What does that cover that PI insurance doesn't cover?
Really good question, and I've been asked that over the years a number of times. So to give you context, cyber insurance in Australia has been around for about 20 years. As most products do, it started in the UK market and was tested there for some time, then came over to Australia. And the way it evolved was a lot of policies would put on an endorsement or an optional extension to the policy. So maybe under your property policy, your professional indemnity or directors and officers insurance policy. And there might be something tacked on the back that says we will cover cyber risks as well. So we're talking losses and liabilities that come out of cyber attacks. But at that stage, no one really had the language to even describe what we were talking about here. So there were a lot of issues coming out of claims at that time. And then the cyber policy itself evolved and started being sold. And what happened then was that the insurers started taking off those additional endorsements at the back of your standard policies. So on your ISR or property policy, there used to be an electronic data endorsement or extension. That was all wound back with the idea being that if you wanted cyber cover, you had to go and get a standalone policy and purchase that separately. Of course, that's a neat way to make money for the insurance industry, but it's also a neat way to quarantine, I guess, your cover to one particular policy. So the cyber policy itself is quite unique because it covers first-party loss and third-party loss. So the first-party loss element is where you get the cover for the immediate aftermath. So that's, in my mind, the forensic technologists rushing in, restoring your data, locking everything down, fixing the problem essentially. That can be obviously an extremely expensive exercise, and that's where the PR cover comes in as well. The business interruption cover is also in there. And as I mentioned earlier, there is some controversy around that cover because that tends to be where there's a divergence of views. Part of that is because every cyber policy has a waiting period, so 48 hours after the incident, for example, where the policyholder has to actually bear that loss themselves, like an excess under your car insurance. There's also an indemnity period, which is the period of time in which you will have cover for business interruption. If your business is down for 2 years or affected in some way, you might have a 48-month indemnity period. You'd be pretty lucky to get that now in the current insurance market. But the challenge is that those parameters, the waiting period and the indemnity period, vary so wildly among cyber policies that if you get it wrong, you can actually be left uninsured completely. So you've got to be very careful about that when you're purchasing cyber insurance. So it's a pretty unique product.
Wow. Well, thanks very much for chatting to me today, Lucy. There's some great insights there. I think we can both agree that the Australian legal landscape is changing rapidly to respond to the threat of cyber incidents, as is the insurance market. And I think the key message coming out of that chat today is that it's more important than ever to take some proactive steps to manage your organisation's cyber risk.